Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good As Gold. Following the upward movement in gold prices last week, gold has been locked in a bit of a tug of war over the past 2 days. The market is grappling with the idea that the Fed may delay the rate cuts and reduce their size, which is damping the enthusiasm for gold going up. However, there's still demand for safe haven assets, which is propping up gold from below. Investors are playing it safe ahead of the US core PCE inflation data due this week. So taking a peek at the gold against US dollar daily chart, things were looking pretty solid last week with a nice upward trend. And on Friday, we even saw prices cruising above $2040, bagging a neat 1.1% gain for the week. But this week has seen prices come under slight pressure, currently hovering in the middle of the trading range between $2,000 and $2066 since the start of the year. The two inside bars following last Friday's session suggest there might be some momentum building up, but the ADR has been on a downward trend from mid-February, hitting a new low since late September last year, with yesterday's reading barely scraping past 17. Such low volatility is reinforcing the importance of the key levels at $2066 and $2,000, acting as significant resistance and support levels, respectively. The market is kind of quiet right now, mainly because the bullish and bearish factors are sort of balancing each other out. On one side, the upward move in gold prices is being hampered by the Fed's hawkish stance on interest rates. Since the beginning of the year, the market has dialed down its expectations for how much the Fed will cut rates by over 80 basis points, getting closer to what the central bank itself has been predicting: 3 rate cuts. Meanwhile, Fed officials keep hinting at potential rate cuts later this year. So holding on to gold is kind of costly right now, which is weighing down on its price. And if strong economic data keeps making Fed second guess when to cut rates, investors might shift their focus to stocks and cryptocurrencies for better returns, putting more pressure on gold. On the flip side, the market is only really disagreeing about when the rate cuts will happen, and I'm personally leaning towards the US dollar taking a bit of a nosedive this year. Despite the recent uptick in 2-year US Treasury yields, which are now about 4.7%, there's still a fair bit of demand for safe haven assets. Geopolitically, tensions flared up in the Middle East over the weekend, with ongoing strife in Gaza Strip, and negotiations are still ongoing for a new ceasefire. From an economic standpoint, those high interest rates have been putting the squeeze on the market, with January's retail sales numbers hinting at a slowdown in consumer spending. If that trend spills over into the job market, it could spell trouble for the US economy. Meanwhile, the high interest rate environment is also weighing on the US property market, with commercial property prices in the US dropping by 11% since the Fed started hiking rates back in March 2022, putting a lot of pressure on the system. Plus, there are worries about liquidity in the US financial system as overnight reverse repo usage keeps tapering off. So to sum it up, rate cuts in 2024 are the big story, but the question now is when they'll start. In the short term, the Fed's hawkish stance is putting the squeeze on gold prices, but there's still some support for gold amidst concerns about US election, global turmoil, and worries about consumer spending and the overall health of the US economy. So we're probably looking at gold prices staying range-bound this week. As a key gauge for the Fed policy, Thursday night's release of the US core PCE data is going to be a big deal for the gold market. The consensus is expecting a 0.4% month-on-month increase in core PCE, with a 2.8% year-on-year increase. If the data beats expectations again, the markets might start pricing out more rate cuts, giving the US dollar a boost and putting more pressure on gold. Also, keep an eye out for China's manufacturing and services PMI data from the National Bureau of Statistics on Friday. If both indices show improvement as expected, gold might get a lift from optimism about future demand. So that's pretty much for this week. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!